I'm Michael, and this is California. And last weekend, President Trump passed a handful of executive orders to help assist Americans who are struggling because of the reinstituted lockdowns and as a result of the pandemic. Out of the bunch, one of Trump's most confusing executive orders for businesses and workers is the payroll tax deferral, or cut as the president calls it. This is because it is not clear how these deferrals will save companies and workers money, if in fact they will increase spending within the economy and bring back jobs, as well as if they actually might have detrimental effects on the entitlement programs like Social Security. So today we're going to cover how Trump's executive orders for payroll tax cuts may affect our country right now and into the future. Now this is your 5-minute daily dose, so let's make this quick. So first, let's talk a bit about payroll taxes. When we get paid, out of every payroll check, we split 12.4% tax with our employers. This tax money goes into a Social Security trust fund that pays for the Social Security checks that people on retirement and disability receive monthly. We pay 6.2% of that tax, and our employers pay the other 6.2% of that tax. Additionally, we each pay another 1.45% for the Medicare trust fund. These funds are taken out of every paycheck we receive until we retire. Now, once we retire, then we can start drawing on these trust funds for our Social Security checks as early as age 62. Under Trump's executive order, the 6.2% of the paycheck that is normally taken out for Social Security tax would not be taken out as long as your bi-weekly salary is less than $4,000 and you make under around $100,000 a year. This payroll tax cut would start as early as this August and continue until the end of the year. In theory, adding 6.2% of somebody's check back into their pockets, which they can spend on things like gas, food, and rent. This would also mean that 6.2% of the money for businesses would also go back into their pockets, allowing them to pay for things like rent as well as new employees. But so far, it's not clear how the execution of this would work, for a couple of reasons. The main reason is that the president doesn't have the power to unilaterally cut taxes. He is able to defer them, especially in a time of declared disaster, but he is not able to eliminate them in totality. This is the job of Congress. So if these taxes are deferred, it means that both individuals and businesses will have to pay them back at some point in the next year, making them less of a tax cut and more of a loan from the government that has to be paid back. This would be unless Congress is able to pass legislation to forgive the tax money that is being deferred. The uncertainty about whether Congress will forgive the deferred taxes coming next year, or possibility of change in the White House resulting in the new president not pushing for taxes to be forgiven, is leading companies to hold on to the money in escrow rather than pay it out to their employees, opting instead to hold on to the money until there is clearer guidance from the government about whether or not it'll be forgiven. This in turn means that the money may never actually get into the hands of employees. Additionally, if it does go into the hands of the employees and it doesn't get forgiven by Congress, it'll mean that the money will have to be paid back next year, ultimately only making workers' taxes higher for 2021. So the uncertainty is one of the main problems, but there should be more guidance from the Treasury Department next week about how the tax cut money could be distributed to employees. The next problem is that tax cuts would leave a lot of people out who really need the money, but don't actually receive paychecks. This is because payroll tax cuts are only valuable to people who are on a payroll. So any assistance that this executive order would provide would be lost on those folks whose sole income is from somewhere like, example, Social Security, SSI, living off retirement investments, or unemployment. Meaning that in many cases, it misses the people who need the money the most. Furthermore, it is unclear if the tax cut would assist small business owners and sole proprietors who are not usually paid on payroll but are self-employed. This really narrows down the effective benefit that these payroll tax cuts would have, and only further to exclude big chunks of the American population from support that they could really use. Finally, a long-term consequence of Trump's tax cuts could be the potential damage that it could do to the Social Security Trust Fund. This is because, as I said before, the trust fund uses money from the payroll tax, the 6.2% that we pay out of our paychecks, to pay for retired and disabled individuals' Social Security pension checks. This is problematic because even right now, at the current rate of funding, the Social Security fund is likely to be unsustainable by 2035, at which time it will only be able to pay out 79% of the entitlements it owes to the American people. These estimates are also from before April and do not account for the lost taxes as a result of this pandemic. But the Trump administration is saying that they are not concerned about the effect on the Social Security Trust Fund. This is because of automatic contributions from the general fund that would be triggered to make the trust funds whole again. This wouldn't be the first time that this strategy has been used by a president. President Obama utilized the automatic reimbursement to fill out the Social Security Trust Fund after his payroll tax cuts in 2011. But given the huge amounts of debt that the country is running up right now, it's not always guaranteed that these funds will still be there. And if they are, it may mean taking money from somewhere else that's equally important within our budget. This has been your 5-minute daily dose. And I hope that you found it interesting or helpful or at least useful. And if you did, please don't forget to like and subscribe. Now, other than that, I am Michael, and this is Carelifornia, wishing you a happy, healthy day.